We have always said on this channel that hope is not a strategy in the stock market. Now, if hope is not a strategy, what then is a strategy? Our strategy is always focusing on the fundamentals of these businesses and looking at the price movement to be able to understand where these businesses are going. So today, because of that philosophy, we'll be telling you 10 undervalued stocks that are currently in a generational buy up positions, that if you start buying now, in few months from now, the stock is going to take a big move that will change your financial situation in 2026. Now, this is clockwise, as you know, and my name is Providence. I've never done this alone before. My guest is here, the man that says he sleeps on the charts and he sleeps on the fundamentals of these businesses. Now, with a resounding virtual round of applause, welcome, Mr. Kanem. Welcome to Clockwise.
Thank you very much for having me.
Now the market is so good now. We are seeing so many smiles. Somebody was saying there is joy in the market. You see, there are joy in the market. Like we said some few weeks ago, that the dip was not a real dip. People can actually buy. But as it stands now, there are still some stocks that are in a very low position. They are not penny stocks. They are not down, but they are currently undervalued. If you place the fundamentals and the current price, you see that they are currently undervalued, and that's what we'll be discussing today. 10 of them. Yes. But before then, let me see your overview of what is happening in the market today.
Okay, so the market has been, we are in a recovery phase. The NGX, the All Share Index, has come up from the June carnage. It has started recovering. We've seen a number of some standout names that have contributed to this. Face Holco, incidentally, Face Holco was a name that I think 2 weeks ago we identified Face Holco as one of the names we wanted. We made recommendations for buy recommendations, and I'm happy to mention that. Remember, even when it got down to $52, I also bought. It was very, very counterintuitive because I think the 5 sessions before that were all red candles. But for me, I bought it because number one, it had gotten to a demand zone, a very strong demand zone, and number two, I knew that the earnings season is coming, and I knew that some of those names would actually have a very positive call, and therefore that will influence the stock price. And I also believed the Holdco, because especially for Access Core, Face Holdco, and GTCO, those holding companies, there was this overhang of the regulatory guidelines, the new regulatory guidelines for Holdcos. Yeah. So that for me was one of the things that was like a headwind for Holdcos, which Face Holdco was one of them. So I knew that had been priced in by the market because, investors have now become used to the fact that when CBN says something is happening, it's happening. That's just, let's hear from the public, is more like an academic exercise. So I suspected that it had been priced in. So for me, Face Holdco was really being too much. That was too much of a punishment for that name, and so I bought it. And today it's actually at 87. It's actually going from 52 to 87. So very soon I might be 2xing on my investment.
That's the beauty of actually comparing fundamentals and price.
But fundamentals also ties in too, because we've seen Otedola, what he has done. He has really solidified his position on Face Holdco. When you see insiders buying a stock,
there's something they know.
Then there's something they know. So that's a very big confidence booster for investors.
Like we said on this show, you have to follow the money.
Somebody like
Otedola actually rebuys this.
Yes.
There's something he knows about that business.
Yes, that you might not know.
You also have to just.
So when you see those, but the thing is, if you're looking at buying Face Holdco, I think for the past a few days, for the past 1 week or thereabout, it's been printing a green candle. So that's why when, like they say, when the blood is in the street, buy. That day when I made that call, there was serious blood in the street because it was heading down to 52 naira per share. I always say buy when the blood is thickest, because like they say, the darkest part of the night gives way to the morning. So I think that's the philosophy investors should have to be able to catch some of those.
Now from what you've said, we can actually agree that looking at the price is not the best form of investment. You should actually look at the fundamentals more.
Fundamentals are good. There's technical seems to work in a way where it matches with the price action.
But most times the market tends to punish or price down a particular business, okay,
based off of fundamentals, yes, obviously, so, because investors are looking at what's happening to that business, and then that. But sometimes price also gives you some guide. That's why I don't only dwell on fundamentals, I also dwell on price action technicals too. If you observe, if you go back to the chart, you see that Facebook literally dipped into a very strong demand zone and ripped off, and today we're already having a brand new all-time high for Facebook.
All right, let's look at those 10 undervalued stocks.
So so still speaking, you know, Zenith Bank would be my number one name.
Okay.
Zenith Bank would be my number one name because we are talking about undervalued. Undervalued meaning that Zenith Bank is the strongest. I've always said it on this channel. Zenith Bank is, when it comes to balance sheet discipline, when it comes to loan management, Zenith Bank, that discipline is unmatched. You know, so but Zenith Bank traded as much as 137 naira per share. Now it's down to less than, I think it's even down to 104 naira per share. So that for me is not that nothing has changed about the fundamentals. You know, so I think this is a place where you can actually accumulate Zenith Bank, because this is a strong name. I can tell you for a fact that once H1 results come out and Q2 earnings come out, Zenith Bank will be one of the names that would actually lead the rally.
Okay.
Yes. So you want to, I look at this as a 19% discount. Yeah, it's a 19% discount on, or even 20% discount on the all-time highs of Zenith Bank. So if you were thinking of buying it when it was nudging at 130 something, don't you think you should be even more interested in buying? You should love the name more now that it is in such a huge discount. So I think Zenith Bank will be a very strong name for me.
So it's a good point to actually.
It's a good point to start accumulating.
Okay.
It's a good point to start.
Although we don't actually propagate you actually putting so much money at
once. No, that's why I use the word accumulate.
Yeah.
You don't dump in everything. Even that Facebook code I talked about,
you have different price points.
I had different price points. I think I bought up to 50. I think I did 53. I did 53. I did a lot all the way from 55. I think we had a live show when it dipped below 60. So from when it dipped below 60, I started accumulating it aggressively, because for starters, I know that when a price reaches a strong demand zone, what happens next is a reversal. Okay. Most times. So I mean, so it went down to that demand zone. The same thing with Access Core. If you observe, I bought Access Core and I realized that it was going to a very strong demand zone. If you look at it between 20 and 22, Naira was a strong demand zone. I made a very big buy at 21.9. It snapped back to 25, which is already almost a 20% gain on my investment. So you want to look at, especially when it gets to that demand zone, you want to actually enter, because demand zone means this is where buyers are most likely going to want to defend the price from going forward. Okay. So I think Zenith Bank is a very good buy for me.
Okay, all right. Now,
the next one would be GTCO. GTCO went as far as 157. Yeah, 57. Now it's back to less 124. In fact, it notched towards 122. That's more than a 20% discount. And we are just getting into earnings season. I know that GTCO will do very well. I know that GTCO has subsidiaries. If you observe, let me even tell you, do you know, I saw a message from Bamboo. They used to have UBA as their domiciliary account holders. Now they are now recommending to their customers, I inclusive, to deposit to their Zenith Bank domiciliary account for our investment. So that tells you the dominance of GTCO. That tells you what they are gaining from the subsidiaries that they have. Very strong balance sheet, very strong earnings power. In fact, especially in a high interest rate environment, those guys and then their dominance in the FX space means, I mean, you know that something that is coming in very soon that promises to pay investors dividends in US dollars. Yes. So you know who is primed to benefit the most in that environment. So GTCO for me is I think the whole core issues have already been priced into the market. So we know that it's going to happen. The only thing is that, do I believe that I even think that even if GT decides to go for to raise funds to be able to meet that 20% marginal margin for holdcos, then I don't think the price action. What I'm even thinking is that once earnings show up, half year and quarterly earnings, the price of GTCO will shoot up. So even if they decide to go to the market for a public offer, it would not dip the price below what we are currently seeing.
Okay.
That's what I'm thinking. So I think that's why I'm saying this could be a point to start adding to that name.
Okay, the third one.
So the third one will still be in the banking sector.
I feel the banking sector are having more of
yes, because banking sector is the most regulated.
Yes, they have the
most regulated, and because of the recapitalization, the likelihood of a bank failing now is very extremely slim. Remember, investors, when it has to do with depositors and investors and shareholders, the CBN and the NDIC prioritize depositors more than the shareholders. Good. So shareholders ask themselves, or investors ask themselves a question: which bank is most likely going to fail? Because they know if it fails, their money is gone. They are not guaranteed of any returns. And especially at this point where you have we've seen what is happening in the fixed income market. So banks are most primed to win in the fixed income market because their interest rate income is going to be, very soon, the next 2 weeks results will show up, and you see the kind of numbers these guys will be printing in terms of interest income. So the next name I'm going to mention will still be in the banking space, which is Access Corp.
I want to mention Access Corp.
No, Access Corp. Access Corp is still trading, even with the movement from that 20, it is still trading at less than 0.3 price to book. So for me, it is still trading as a distressed bank. That's why I've been accumulating Access Bank. And of course, you know that you can tell that.
Is your bank?
I've been accumulating Access Bank because Access Corp, because I know when this issue around impairment charge clears off, people will now recognize what Access Bank actually represents. Okay. People will recognize that this is a bank that is the largest in terms of net asset value, $52 trillion, or trillion naira. If the Access Bank can leverage that asset base, that's a serious earnings power you're talking about. So I think they are still having to deal with the impairment charges, which has made it almost impossible for them to pay dividends. Because again, like I told you, dividends you saw even for this threshold, one of the things that actually took it down was the fact that there was no prospect of dividend payment. So banks that did not pay dividends were punished. Punished very severely. Banks that have impairment charge were also punished very severely. This bank went from a 523 billion naira of in impairment charge. I think first quarter they did only 79. So we expect, if you look at that on a quarterly basis, we expect it to drop down. Even if it drops down, I know even if Access Bank doesn't pay dividend this quarter, I still think it is an opportunity for investors to do what? To punish it more, and that gives me what? An opportunity to buy more. I'm a value investor, as you already know. So I think Access Bank is a name that you want to accumulate. The fundamentals are still that the bank it has tentacles across the continent, and that allows it to be a choice for investors, for even institutional partners that want to invest across the continent. Access Bank represents that kind of a strong brand. So I think investing, for me, the whole core issue which I told you about, first whole core, still applies to, or GTCO 2 still applies to Access Core, but I think that has already been priced in. So when you're on the floor, the only place you can go to is what? Is up. I knew that you are going to say it's the road because you don't want to accept.
No. You're giving me points. I've actually seen what you're saying. I've looked at it myself.
Yes,
and I saw that. But your confidence is. I like the way you have so much confidence.
Yeah, I mean, I do have. I mean, Access Bank is a very big name. Forget about the, like
What they are going
forget
through
about
now.
what they are going through now. If I fold 500 naira note, I fold it and fold it so much, and I drop it on the ground, and I pick a very clean 200 naira note and keep it. Which one would you pick?
They folded 500.
Because it is still, that's the concept of value. Do you understand? The fact that it is presented in a folded form doesn't mean
that the value
has dropped.
Yeah.
And in fact, for me, it means that it's an opportunity for even to appreciate more. I wouldn't have been able to buy Access Bank at the prices I'm buying it at this point if all of these things did not happen.
All right.
So I think that is
that's the number 3.
Then that is number 3. Then the next one I've been looking at it recently, is Fidelity Bank.
Okay.
I didn't look at, and by the way, Fidelity Bank is a tier 2 bank. I've been looking at Fidelity Bank because the bank seems to have, in terms of liquidity, I've started looking at banks that can provide that liquidity, that have that liquidity, because I know that when investors come in, one of the things they always like to look out for is liquidity. How liquid is a stock? It's not just about a stock that can do 10%. Of course, the maximum you can go in a day is 10 in a session is 10% on the NGX. That can do 10% today, 10% today. No. They want to first of all look at how liquid is that stock.
Yeah.
If I want to exit my position now, how can I exit? So I think for me, Fidelity Bank wins in the aspect of that. And earnings growth for the last, the last quarter was also a bit. It was impressive too. So it wins on both liquidity and earnings growth, which was very, very strong. And then, of course, Fidelity, we are also looking at dividend payments, because again, we are not just building portfolios for growth, we're also building portfolio for dividends. Then, of course, the fifth one, I cannot talk about Undervalued without talking about UBA.
Yeah.
I took a risk buying UBA at $38, not 38 naira. It didn't sound very smart because it has been literally printing. But for me, I asked myself a question. Here is a bank that has presence in 20 African countries. Here is a bank that sits as one of the tier 1 banks. Here is the bank. So why is it trading at the current price? Why? And I know the reason. When you don't pay dividends,
they punish you.
You get to punish
the
you.
market punishes you.
But as a value investor, I ask myself, when do you get into a stock? It is when it is being punished. I don't go into hype. When the last time I was on the show and I talked about trimming Micron, I got off the show. When that video came out, someone was like, how can you be trimming Micron when it is doing? Now, Micron from $1,200 per share, it has now gone down to under $900 per share. When things are overextended, you trim them. Because at that point, I knew that it was stretched.
Okay.
Even though the price to earnings ratio was still single digit. The same thing. So that hype, I still believe in the name. I'm still going to buy back in. I want it to simmer a little bit. The same thing. So for UBA, it went up. But I looked at the opportunity of the punishment that it received as an opportunity for me to buy at lower valuations. When you fall to the ground, the other thing you can do is to go up.
Okay, let's take away you can roll. You can go up.
you can go up. So
you've won this argument with just the analogy you just gave about a folded 500 naira.
Yes.
And a clean 200 naira.
Yes.
You've won the argument. I go with you.
So UBA is a very strong name that I would recommend anytime, any day. So that's it for the banks. The next sector for me is industrials.
Okay.
Industrials, and for industrials, I will start with Dangote Cement. Dangote Cement, I still believe, though it has not really budged so much. It came down a little bit, but it's not really budged as much as Boa Cement.
Okay.
In this downdraft that we've seen in the stock prices.
You call it the pullback.
And it's the same thing, downdraft, pullback.
We are not yet in the bear market.
No, we are not. Bear market is from 20% down. So we have not. Okay, so some names you would say that are in the bear market, some names that actually did 20% from their all-time highs. But I'm looking at the all share index.
Yes, yeah.
Okay, so Dangote Cement, if there's anybody that has pricing power when it comes to cement, it's Dangote Cement.
Yeah.
If there's anybody that has tentacles, I mean, you've seen what they have started in Ethiopia. You've seen they are moving across the African continent. So Dangote is no longer a Nigerian infrastructure play. It is now a Pan-African infrastructure play. So I think if you ask me, the price is currently trading is an insane discount for any continental infrastructure play. That's why I think with the last dip, I added some. I added some to some. So I added that name to my holding. So because for me, I believe that Africa is a growing continent. We are looking at a continent that will be currently we are sitting about 1.3 or 1.4 billion people on the continent. That will grow to over 2 billion in the next decade or thereabout. That's when you have more people. Africa, by the way, is the youngest continent on the planet. That represents an opportunity, a demographic opportunity. You have a burgeoning middle class. That represents opportunity. So infrastructure demand will continue to increase. The African Development Bank estimates $130 to $150 billion annual investment opportunity in Africa infrastructure. If Dangote can tap into just a little tiny bit of that, you know what that means to the company. So I believe that Dangote is a name that at this point, given the fact that it's now a continental player, and the prices that it's selling at this point it's criminally undervalued for me.
Okay.
Then, of course, very close to Dangote would be still in the cement space, because I believe as people build more infrastructure. If you look at roads nowadays, roads now don't even use. We are not even using concrete to build roads. Who do you think stands to win? The people players in the cement industry. I also think Lafarge. Lafarge. They change their names now. The name now, but I'm using the Lafarge so that people would remember. So Lafarge is also a name for the same reasons. Though Lafarge doesn't have as much pricing power, they doesn't have as much advantage. But I think with these new guys that came in to pick to merge with Lafarge to really take over I think Lafarge is going to be a very, very big. That restructuring will come. Capital efficiency and all of those will make the name to be more sought after by investors. And so I think it's a represented opportunity. At this point, I mean, some of those structuring have not happened yet. So I think at this point, this is where you can really enter, and then you begin to have. I see that sometimes when companies look at what happened to May and Becker. When companies get absorbed by international partners, investors begin to price in the fact that that exposure to the international market would provide a premium to those stock prices. So I think the same thing could happen to Lafarge, but I think when do you think is a good time to enter? At this point, it's not been those changes, those structures have not been set at this point. So
all right, that's the sixth one.
Then that's the sixth one. That's cement. I've talked about cement. Then of course I cannot finish this conversation without mentioning going to the energy space. Energy space. You have a name that acquired Mobil producing Nigeria. You have a name that is winning
in the oil sector.
Oil sector. You have a name that is soon going to have, as Dangote expands, as Dangote refinery expands,
have to expand also.
It's a represented opportunity for them, because I'm looking at a situation where Dangote will literally be taking off everything they're producing. Think about that for a second.
Dangote cannot succeed without them.
And by the way, now you know that Dangote is now selling fuel in dollars. Yes, they're not selling fuel in dollars. So that means that the entire value chain, Seplat is paying dividends in US dollars.
Yeah.
Dangote wants to be paying in US dollars. And so you have, represents an opportunity. Investors trying to hedge their bets against naira devaluation. That's a good name for them. But beyond that, I see the margin expansion for Seplat, given the fact that if you sell something to someone in your neighborhood, in your backyard, you stand to make more money. you start to take less risk.
Yeah.
You sell the 20% at international prices, but you are not bearing the cost of logistics. You are not bearing the risk, logistic risk and all of those. That actually expands that's a recipe for margin expansion. Margin expansion means you have a higher return, which can also be shared to investors. So I think once investors begin to price this in, a lot of investors always likes to see the early innings of something before they, but discerning investors can see it from light years away. So I believe that if you see the prospect that is coming for surplus, I think it's undervalued at this point. Yeah, someone will tell me then it's not bullish in terms of price action.
Yeah.
But I think if you understand where it is going, I remember when surplus was selling at less than 2,000 naira. Think about it. I think around that figure, between 2,000 and 3,000. It was too expensive. I remember when Airtel was selling at around, I think we even talked about it on this show when it was selling at around $2,000, 2,000 naira. Now it's 5,800. Yeah. So I want investors not to think, oh, this name is already priced because of the stock price. No, think about what is the multiple, what is the earnings growth, the earnings power, the balance sheet. All of these things
actually tell you the price,
what the actual value of the company should be. And if you are seeing a very huge discount or dislocation, then you should begin to think about accumulating that.
The seventh one.
Then, of course, I like to go into agriculture too. Agriculture for me is very big because people will always eat. The last conversation we had where we talked about consumer staples.
People always eat.
I think Presco has done a very good job in terms of rewarding, in terms of return on equity. I think Presco and Okomu, but Presco was very outstanding in terms of return on equity, and I think it will continue. Okay. At this point, we can only have more. More people are now, because of the stability of the exchange rate, guess what? Companies in Nigeria are benefiting more from the spread within the country and also the opportunities outside the country. So Presco seems to be winning on this front. It is, for me, the predominant name when it comes to agriculture. The numbers they did the last time, I also believe that even their second quarter earnings and half-year earnings will also be very impressive. You want to get into it at this point where results have not been announced. Don't wait until results are announced and then you see very, very green candles and you begin to buy at the top. And when it retraces a little bit,
just know you're going to sell at the bottom.
When it retraces a little bit, you begin to complain. So don't do that. The last name I'm going to mention would be Transcore. Transcore for me sits in. Transcore, you have, you have Transcore sitting, especially in the power sector. CBN recently gave a directive that all, especially companies that are handling Nigerian data, what we call sensitive, personally identifiable information, that would extend to fintechs, and you name them, should have their data centers or should host on local data centers. Do you know what that means? If you understand the meaning of that, it means that there will be huge, if that goes through, there will be huge demand for energy. Very huge demand for energy. And guess who benefits? A guy like Transcore that sits in the nexus of all of the energy in the energy space. You're looking at other names like Gerugu Power, but Transcore sits, in a very comfortable position in the energy space. Tony Lumelu recently acquired Afam, is the owner of Afam now, and a few other power infrastructure. So we believe there will be cases of island powering. Island powering is where you build for a specific data center. We've seen it happen in the US. We've seen the explosion in names like Venova and other power names. Caterpillar, you saw the numbers. These guys are doing triple-digit earnings growth. So we are most likely going to see the same thing. And I think that Transcore is primed to benefit immensely from that revolution. So I think this is a good time for you to begin to allocate to those names.
All right. No, you've talked about Zenith Bank, you've talked about GTCO, Access, UBA, you've talked about Dangote. Fidelity.
Dangote, Lafarge, Presco, and Transcore.
All right. thing. Now, if you followed us to this point, I want you to actually write the ones you've heard at the comment section. Let's see how attentive you've been with us. Thank you for coming.
You're welcome.
Those are good analysis. I will not forget that analogy. If a squeezed 500 naira is dropped to the ground, so squeezed, and a clean 200 naira is also dropped to the ground, which one will you pick? You see, the state of the money does not actually reduce the value of the money. You're a value investor, and I give it to you. You've done it very well. Thank you very much for coming. Now, on that note, we'll come to the end of today's episode of Clockwise. Now, do not forget to like, subscribe, put a notification bell on this channel because of the amazing content we bring. And also, if you want to join our community, there is a link on our profile that can actually lead you to our community. Our profile, our Telegram link is there on our profile. Go to our profile page, you'll see a link there. Or you just go to Telegram and type in Clockwise Podcast. Yes, just go to Telegram, type Clockwise Podcast, and you can get access to the community through that format. Thank you for staying to this point. My name is Providence, and keep investing because we'll see you again in our next episode. Thank you very much.